It's around the stock overhang of oil. You're trying to get it down. If that's not gone, if the overhang is not gone in this next 6 months, will you have to extend the agreement as it stands right now?
Thank you very much for having me. I think first things first, the preoccupation of all the 24 participating countries in the Declaration of Cooperation entered into on the 10th of December in Vienna is the full and timely implementation of the obligations of these participating countries. We have just received preliminary numbers for the first month of this period, January numbers. And these January numbers are very encouraging going forward. Therefore, it is premature for us to talk of what will happen in the next 5 months. But all I can tell you is that the level of commitment we have received from both OPEC and non-OPEC member countries, and we are in regular contact with them. Tomorrow we are meeting in Vienna in the sub-technical committee. We are going to go for much higher levels of compliance because of the very high level of stocks that we have brought over with us from 2016.
When will you get to 100% compliance, briefly?
We hope to achieve 100% in due course.
In due course. I'm hearing that OPEC members are exporting more in the month of February. Can you allay the market's fears on that?
This is just the first month of the implementation of this decision. The numbers that we have received so far confirm that all the participating countries are struggling very hard to ensure that they implement their obligations 100%. And I want to align myself with the expectation of Khalid Al-Falih of Saudi Arabia that anything less than 100% is not satisfactory.
Let's talk about the market, because the market is driven by a number of facets. One is compliance, the data that you've just given us, the betting in the market. There's two things driving the market price at the moment. One is the hedge fund market, and two is your deal. Sir, I put it to you that without an extension of the deal and the hedge funds being fully committed, you're going to find it tough to sustain $50. Can the market sustain a new bandwidth? Are we in a new bandwidth of $50 and bid on oil?
To the contrary, we have also seen the expectations of the fund managers, including the money managers in the long positions that they have built up, despite the high level of inventories, particularly in the United States. That further demonstrates to us and to the market the confidence that the market has in us to fully and timely implement our obligations.
You take me on to the other issue, which is supply. Storage in the United States is the highest since the 1930s. I think some of my colleagues are talking about the microeconomics of the oil market. Given the technology revolution, the frackers are back in force in the United States of America. Can OPEC survive this level of storage in the United States of America and the technology development? Can the oil market really rebalance with this level of fracking?
I think tight oil, shale oil in general, will always play a role in meeting current and future demand for oil.
But are they one of your biggest threats, Your Excellency?
No, we are in this boat together with them. I have just told you the response I got from independent players in the United States recently, and I look forward to meeting with them at CERAWeek. They have fully aligned with us on the decisions that we have taken because they know they are also beneficiaries to these decisions.
Compliance is the key thing for the market. I just want to focus in a little bit. For example, in the run-up to the deal, I was in Qatar, I was chasing you, I was chasing the Saudis, I was all over the Middle East. But let's talk about some of the commitments to the deal. Iraq was allowed to produce. They submitted to cut by 210,000 barrels. Now, they're not exactly hitting 90% yet, are they? Where are they, and will you expect them to do 100% very soon?
I have got commitment from the highest level of government in Baghdad that they will implement their bargain, they will implement their obligations fully. Therefore, what we are seeing is the efforts that they are making in achieving their targets. Each member country have their own peculiar logistic challenges, and Iraq is not an exception.
Do you fear a great drop in the price of oil? The market seems to think we're in this band with this corridor, 50 at 60. What is it that could be the most disconcerting fact for the market and break us below $50?
I think there is a growing consensus in the industry that the low level of prices that we have seen in 2015 and 2016 was inimical to growth and development of this industry, as well as the well-being of producing countries and the health of producing companies. And there's also a consensus on the issue of the high level of stocks and inventories that continue to weigh on this market, and the rebalancing process that has just begun is work in progress.
Look, we'll finish with this. The shale market is back. Do you see that OPEC is going to have to fight, as it did in 2014, for your market share? You're dealing with a lot of new facets, Mr. Trump and the frackers. Are you going to have to fight for market share again? Are you concerned about your market share?
Our preoccupation is to restore stability to this market, is to minimize the level of volatility that we have seen, is to be able to encourage investments to come back. We have seen these sharp contractions that severely threaten the future of this industry that is not in the interest of both producers and consumers. This is what we are focusing on. We have no price objective as a matter of policy in OPEC. At the end of the day, the market will decide its equilibrium price.